Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, what a roller coaster ride it was for the market today. You know, we started on a strong footing. We reclaimed that 22,300 mark at one point. But around midday, I think, we saw such a sharp turn.
Absolutely.
And the Nifty, in fact, ended the day below that 22,000 mark as well. Even the mid and small cap indices came off their day's highs. If you look at the BSE oil and gas index, that was 700 points off day's highs. Even the Nifty Bank index, I think it fell quite a lot from the day's high. Somewhere around 700 point cut coming in there from the day's high. And if you look at the Sensex, that also shed somewhere around 900 points from day's high. But what managed to hold out, Yatin, was the IT pack ahead of Infosys numbers. Infosys as well has managed to end the day in the green. Of course, we'll be expecting the numbers any time now. But if you look at the India VIX in particular, spiked over 5%, Yatin. It's back above that 13 level. It had come down to 11 levels, last week. And, of course, we were wondering whether or not, today's up move at the start was a dead cat bounce or not. But, right now, looking at the market, it looks like it was a dead cat bounce, Yatin. But let me quickly point out, some of the sectors that managed to hold out, metals, IT and realty, these managed to hold on to gains. But, aside of that, banks, FMCG, pharma, all these sectors were among the laggards. Individual gainers, of course, Bharti Airtel was one of them. Power Grid, Hindalco, Bajaj Auto, HDFC Life reported numbers, but the stock ended high by about 1% or thereabouts. The VNP margins were a miss. On the flip side, Apollo Hospital, Nestle, Titan, Axis Bank, ONGC and Coal India were among the laggards. But Yatin, talk about the breadth. What happened? Why was there so much volatility today?
So clearly, no reasons for why the volatility, but intraday we had three swings, positive and negative through the day. So it was a very choppy session. And as you rightly mentioned, we were below that 22,000 mark on the Nifty. So not a great closing for the markets, but yes, 21,700 and 21,800. These are the two crucial support zones from which market will look to take some support. But below that, a lot of technical analysts, mind you, expect a big breakdown. So yes, 200, 300 points from here could be a support zone, but that needs to hold. Most importantly, today the mid caps were holding. And probably that is the reason why the breadth was almost 3:2 or better than that. But yes, in the last half an hour also, because of the volatilities, few of the mid caps saw profit taking. In terms of gainers, we had Mastech after winning a UK government order of defence and related IT services. That stock gained 15%, but ended the day higher by around 8%. Power India, Just Dial, Quest Corp, Mapma India, KSB Pumps were the other gainers in trade. What did not do well is Sterlite Technologies, and the QIP lock-in opened, probably because of which there was a sell-off in the shares, down nearly 10%. We had Schneider after the Goldman Sachs downgrade. The stock was down nearly 5% in trade. Oberoi Real Estate, Apollo Hospitals, ABB, Ashok Leyland were the other mid and large cap stocks, wherein we saw some strong profit taking. All of these stocks down anywhere between 3 to 5%.
All right, of course, a roller coaster session for the markets indeed, and that crucial support level of 22,000 rather has been broken. But on that note, let's take a look at some of the stocks that are on our radar this afternoon. Starting with Infosys, it will be reporting its numbers shortly. Mind you, TCS started the earnings season on a good footing, given the fact that margins there were at a 3-year high. Deal wins have been at record, and of course, in terms of revenue growth, it has been a modest quarter as well. But for Infosys, the numbers are likely to be tepid in the wake of discretionary spending remaining weak. A revival in discretionary spending is still pending. It is elusive to say the least. And if you look at the margins, that are likely to see some bit of an uptick, modest 20 basis point uptick at 20.7%. That's the Moneycontrol poll. Recovery from furloughs, operational efficiencies are some things that may support margins, but visa costs as well as wage hikes are potential headwinds where margins are concerned. Let's talk about the revenues. Expected at 38,413 crores, down 1.1% on a QOQ basis. That's according to the Moneycontrol poll. Net profit is seen flat at 6,128 crore rupees. Both on a quarter and YOY basis, the net profit is likely to be extremely flat. Dollar revenue, according to CNBC TV18 poll, could decline by 0.3%. CC revenues could decline by 0.5%. 2%, all both these on a quarter-on-quarter basis. On the guidance front for FY25 revenue guidance, the expectations range between 2 to 7%. Mind you, last quarter they had tweaked both the upper and lower ends of the guidance from 1 to 2.5% to 1.5 to 2%. So there is expected to be some bit of an uptick where guidance is concerned. If the company may in fact maintain its FY25 operating margin guidance at 20 to 22%. Factors to watch out for will be, of course, headcount, attrition levels. In Q3, the headcount had shrunk for the 4th consecutive quarter. Also, another thing that the street will be watching out for is whether or not Infosys will declare its revenues from generative AI deals or not. TCS, mind you, became the first Indian companies to declare its generative AI revenues, and it had doubled it to $900 million in the 4th quarter. But of course, margin guidance, revenue guidance, and commentary on how the demand is shaping up. These are some of the factors that will be watched out for, Yatin.
Absolutely, and if you look at the overall performance, for Infosys, the stock has been correcting from levels of nearly 1750. And as you were mentioning, guidance is one thing that will be the most important factor in the entire results. But apart from IT, Telecom, that is one sector to watch out for. Obviously, Vodafone IPO opens today, which is almost 18,000 crores, got a good response from anchor investors. Today, IIFL Securities has come out with a report on telecom stocks, in which they have upped the target on Vodafone Idea to a level of 14 rupees. They are very bullish on stocks like Bharti as well as Jio moving ahead with prospects of IPO. And also, one stock to watch out for will be Indus Tower, which will probably benefit because of the Vodafone fundraise, according to IIFL Securities. Now, if you look at the telecom sector, the next 2 rounds of telecom tariff hikes in the next 3 years is what's fueling the IIFL's Securities assumption in terms of targets for telecom companies. Another thing is that they do not see any regulatory risks for tariffs rising from here on. Now, the most important point is Bharti, wherein the target has been upgraded from a level of 1215 to 1379, and IIFL believes that from here on Bharti Airtel could surprise on earnings, given the fact that there could be a telecom tariff hike, margins could improve, the India business could deliver CAGR, which is a compounded annual growth rate of nearly 20% on the operating performance. Most importantly, we have IIFL Securities, which believes that the AGR dues of telecom companies, wherein a lot of companies have filed a review petition in the Supreme Court. If that curative petition gets a favorable outcome, then Bharti's AGR dues to the government could halve, which would mean better cash flows for Bharti moving ahead. So potentially after the Vodafone Idea's fundraise, there could be a telecom tariff hike, which could not only benefit Vodafone Idea, but also players like Bharti Airtel and Jio, which would have more sensitivity to earnings, Nandita, with tariff hikes coming in.
That's true, Yatin. But another stock that was in focus today was Nestle India. It recorded its steepest fall in 3 years, intraday fall rather, in 3 years on reports of high sugar levels in its baby product Cerelac in India and less affluent nations. Now, Public Eye, which is a Swiss investigative organization and International Baby Food Action Network, they have dispatched samples of the company's baby food items marketed in Asia, Africa and Latin America to a Belgian laboratory for examination. Now, Public Eye report states that the company added sugar in baby food products in India, but the same products that were marketed in Europe and other markets, developed markets, were devoid of any sugar. In fact, the company adds as much as 3 grams sugar in every serving of Cerelac that is sold in India. The study also examined 150 products sold by the company in low and middle income nations, including best-selling Cerelac as well as Nido. The results of the test found that almost all Cerelac wheat-based cereals in those regions targeting infants from 6 months of age contained added sugar equivalent to an average of 4 grams per serving, or a sugar cube, Yatin. But the same product, of course, as I mentioned, was devoid of any sugar in nations like Germany, France and the UK. but the company has said that it has been reducing added sugars by up to 30%. That's what the Nestle India spokesperson has said. But FSSAI, which is the food regulator, is examining the report on Nestle and will place it before a scientific panel. And if it finds that the company is in violation, well, it could take strict action. And of course, this could be this could be an overhang for the stock going forward, Yatin.
And I think the Nestle spokesperson also issued a statement with this regard, in which they said that most of the products are safe. Obviously, I think the government agencies and the regulator will decide, because the company will always try and defend.
Of course.
Including the Maggi issue which was there, and as you mentioned, Nandita, rightly, because of that safety concern of higher sugar levels for babies, I think the stock ended nearly 3.5% lower.
But the Maggi ban had quite an impact on Nestle,
Correct.
right? If this also boils down to something which is very serious, then it could prove to be a near-term overhang for the stock till this issue is resolved. But with that, we've come to the end of this edition of Closing Bell. Of course, we are waiting for Infosys numbers. It will come out any moment. But we'll start our coverage at 4:15 p.m. We'll be decoding the numbers with a couple of experts, and we'll, of course, be getting you the press conference, the management press conference post that at 4:30 p.m. So tune in to Moneycontrol for the earnings analysis. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.